In today's session of Visual JForex, we will be starting afresh with the new indicator named Stochastic Relative Strength Index, Stochastic RSI. We will see how we can design and develop the algorithm for the trading purposes using this indicator block on the Visual JForex platform, which has been developed by the Dukascopy Bank SA. You will find this indicator listed amongst momentum indicators right at the bottom. In last session, we were looking at the stochastic first. Now it's time to move on to a new indicator block. We have to define these input parameters depending on which we will get the output values. We have to define the 7 input values in all. But apart from these first three values, we will not really be changing these characteristics of the block. We will be working with the default setup. In case if you feel like, you can carry out the changes, but for this representative session, I will be sticking with these default values. All I will change is going to be revolving around this candle period, and the shift is the look back period, and depending on that combination, we will have these two output values, the fast K and fast D, and using this we will decide when to go for the trade, whether to go for a long trade or whether to go for a short sell trade. So let us now head to the JForex platform, where I will explain to you the logic behind this algorithm. We will be working with the time frame of 4 hours. So whenever we have the overbought or oversold scenario on the 4 hourly time frame, this time around we will be working with the USD JPY. USD JPY will be our default instrument. On the Visual JForex board, Euro USD is the default instrument. If you want to work with any other instrument, you have to carry out the change in that variable. So for a change time around, we are using this USD JPY as the instrument of choice. And just like the stochastic first, we will be using the stochastic RSI value to look whether the underlying instrument has entered the overbought or oversold scenario or sold situation. And instead of going for the trade right away, what we want to make sure that enough of time has been spent in overbought and oversold situation, and now it looks like the turnaround is happening, and that's the time when we want to jump in and go to initiate the new trade. So the logic is going to be fairly simple. We will be looking at the last 4 hourly candle period stochastic RSI output values, and as you can guess, we will need the fast percent K and fast percent D value to be above 0, and in the penultimate 4 hours the value should have been exactly at 0, both for the fast percent K and fast percent D. And not only the penultimate 4 hourly candle, we want to also consider the candle before that. So here we will be taking the cluster of 3 4 hourly candles, and in the last one the value should be rising and above 0, but in 2 4 hourly candles prior to that, we want the stochastic fast and stochastic D value, fast percent K and fast percent D value to be exactly at 0. And this is one of the feature of this indicator, that we get the value constant at 0. In most other indicators, after these levels are reached, we didn't really see it getting stuck there. But now that we have this feature, I think we can take advantage of it and try to define the trade setup using this particular feature. So we will need this combination to initiate the buy trade, and in case of sell trade, we want to initiate the sell trade when we have the underlying instrument spending considerable time in overbought situation, and after that some sort of correction seems to be taking place. So as soon as that emerges, we want to jump in and place the order. So here the condition is going to be that fast percent K and fast percent D value in the last 4 hours should have been below 100, and in two 4 hourly candles prior to the last one, we will need the fast percent K and fast percent D value at exactly 100. And this is also the output band for this fast percent K and fast percent D value. On the higher side, the limit is at 100, and on the lower side, the limit is at 0. So we are taking advantage of this, and we are using the cluster of three 4 hourly candles to define the conditions for the trade. And along with that, we will need the last 4 hourly candle to have closed on the lower side. Its closing value needs to be below its opening value. That means the sustained selling pressure was there in last 4 hours, and whatever is the highest point of the four candles of 4 hours each, we will take the cluster of four candles of 4 hours each, and whatever is the highest value, we will simply deduct 10 pips from it, and that's the price on which we will be executing the sell trade. So as soon as price starts to drop below the highest point, and 10 pips deducted from that, we will look to initiate the sell trade. In case of the buy trade, provided all the stochastic conditions are in place, as I explained to you earlier, and if the last 4 hourly candle has closed in green, we will be initiating the buy trade as soon as value starts to rise above the 10 pips from the lowest value of cluster of 4 hourly candles. Four candles we are taking, so that's the logic way is going to be, and it's fairly simple to understand, and not much difficult to execute on the Visual JForex board. So I will be explaining to you how we can utilize this combination in a easy way. First thing first, we will need to carry out the instrument subscription. For that, we are going to need the three logical blocks, if blocks first, and here's the standard feature whenever we are working with a new setup. We take this combination. This simply to ensure that only the instrument of choice is considered by algorithm to initiate the trade, and no other instrument trade gets placed. No trade gets placed on any other instrument. So we have to match the last tick instrument to the default instrument. Default variable, default instrument should match the tick instrument, and tick instrument should match the instrument of choice, which is USD JPY. Here we will have to locate the USD JPY, and in first attempt I seem to have overlooked it. Oops. Here it is. Okay, done. The default instrument also needs to be changed to USD JPY. Then the position amount will be changed to 0. This will be changed to 4 hours. Shift will be 1, and we are going to need 2 more stochastic RSI blocks, which will also be a 4 hourly time frame. Shift will be 2 in this case, and for this block it is going to be 3. This will remain default value. In this case, the shift will be 3. Okay, so these are the 3 blocks which will help us define the condition for the execution of the trade. And after that, we will also need to take the help of price action, and for that we are going to need the info blocks. First will be these get historical candles, and then we will also consider the single 4 hourly candle. We will also need to get in loop viewer. This will be changed to 4 hours, and here I will keep the shift at 0, but this candle amount will be changed to 4. Logical to retrieve the individual characteristics, individual variables on this cluster of 4 hourly candles. We will use this array of data. And after that, we will also need to define single 4 hourly candle of the default instrument USD In this case, the shift will be 1, and then as per the customary practice, we also need 2 more get historical candles as of 10 seconds each. will be 1 and 2 respectively. And with this, most of the blocks have been defined, depending on which we will be placing the order. And one calculation expression will also be need to define the 10 pips, and we are going to deduct the 10 pips from the highest value while executing the sell trade, and we will be adding the 10 pips to the lowest value of the 4 hourly candle cluster while executing the buy trade. So for that, we have to consider this calculation expression. Quite easy. Create a new variable, name it as per your choice. Multiply 10 with the default instrument pip size. So it will be A1 into A2, and the result of the calculation will be 10 pips. Okay, so this value will come handy to carry out further calculation while defining the entry point for the buy trade as well as for the sell trade. And with this, we will stop for the day. I hope you have been able to understand the logical part of the setup and the execution for the both sides, for the buy as well as for the sell side, will be explained to you in the subsequent session. First, we will consider the construction for the buy side of the equation, and then we will see how we can go about designing and defining the conditions for the execution of the sell trade as well. So thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on market development. See you next time. Till then, goodbye.